All right, welcome back to Foundation Excellence. Last time that we communicated, we were doing the question paper, November 2023 accounting question paper 1. Now, we did the activities on gap principles and analysis of transactions. So today we should be continuing with statement of comprehensive income, which is the bigger part of this question paper. Now, mostly in all question papers, paper 1 and paper 2, the majority of marks will come from the statement of comprehensive income and the statement of financial position, which is the income statement and the balance sheet. So without further ado, we shall continue. Now look at the mark allocation here. The mark allocation here says 44, and this is for 35 minutes. Remember that there were a couple of things that you needed to know which I had to elaborate on, hence we took more than 25 minutes on the first question. So this one is about 35 minutes, and I'm going to do this video in 2 segments. Now at the beginning of the video, I will show you how to go about in every transaction for accounting. So if you learn this skill from now onwards all the way to grade 12, you will most definitely have a better chance of acing accounting with your 90s and your 95s. I'm not saying acing it with 80s, anybody can do that. So we're looking at about 90s, 95, 100. So if we start here in grade 10, hey, when you get to grade 12, it will be a walk in the park. This is my guarantee to you. All right, now let us continue, ladies and gentlemen. We are going to go to the next page here on the answer sheet. Please view the answer sheet. We are going to look at the next page on the answer sheet. There it is. It's question 1, and then we can see that we completed it. There's some calculations and a couple of rough information. As I said, my writing will not be as legible that it's supposed than the way that it's supposed to be, but yeah, I'm sure it's very much easy for people to see. Remember that we listen first and write after. So if you were listening, you would follow up on me and actually understand what I was talking about. All right, now ladies and gentlemen, this right here is a statement of comprehensive income. Now we are going to start with this question. Now I'm opening the answer book, and then we go to the question paper. When you go to the question paper, here's the question. The first question, question 1, it is done and complete. We did our ticks, and then we come here to question 2. Now ladies and gentlemen, question 2, it reads as thus. Statement of comprehensive income, 44 marks, 35 minutes. Now, Sebenza Traders, this is the name of the business. The following information was taken from the records of Sebenza Traders on the 28th of February 2023, the last day of the financial year. The business uses a markup of 40% on cost. Remember, when you see this, ladies and gentlemen, when you see this markup, when you see the word markup, your ears are supposed to just, they're just supposed to, raise up, because this is a very crucial information. Markup. Now, if they say that the markup on cost, that means this markup is calculated on cost. You can see that on the cost we take 40%. So with that information in your mind, you must start thinking that, okay, since we have that information, that markup on cost is 25%, that means then you take your pen. Ladies and gentlemen, you start indicating. Okay, so that means markup plus cost price is equals to selling price, which means cost price is 100%. Markup is profit, so this is that. So this is 40%. And then that means this on top here should be 140, because they told you the markup is on cost. So that means your cost is going to be 100%. You don't have a markup on cost of sales. That's irrelevant. That's not right. So that means your selling price will be 140. You can see that it's very clear, very straight to the point. Okay, so we've got 140, 140. So when you see that, already you know what's going on here. And remember, ladies and gentlemen, this first part of the income statement, this one is called the trading statement. Okay, space is not enough for me to write exactly what it is, but this is trading statement. This is where the trading activities of the business take place, whereby you have your sales minus your cost of sales, then you get your gross profit. So the main business of the main objective of a business is just to make a profit. So you look at your sales and your cost of sales. It's just like when you're selling any other thing, you're going to look at how much you used to buy that and how much was it for you to sell it. Those are the main things of the business. So there's the trading part of it. So this part, the first part, is called the trading statement. Now, ladies and gentlemen, since we know this, you see this 40% markup has just deliberated in our brains that we are going to use this 40% in order for us to determine selling price. Now, with this is the guide. It doesn't mean that in your adjustment it is going to be as straightforward as it is here. It might change. So let's look at our transactions then. So we're done with that information. I'm just going to erase it because I know how to go about it, but those of you who don't know, they might as well have written this on a piece of paper, but because this is a video, you can always go back and check. Now you see the line that I drew there, I didn't draw it as a mistake. It is purposely put there. It's for a reason. Alright, now we are done with that, with the 40% markup. Remember that the markup, ladies and gentlemen, is equals to 40%. I already know what this means. I explained to you. So that means our sales is going to be 140, our gross is going to be 40, and our cost of sales is going to be 100. That's how we'll be using this markup. Alright, now ladies and gentlemen, let us go to our question paper. When we reach our question paper, we go down to additional information. We go down to the rest of the information, not additional information. Now, what is required? Prepare the statement of comprehensive income for the year ending 28 February 2023. Now this, ladies and gentlemen, is what you have here. This is the statement of comprehensive income. You would have it in your answer book anyways. So we are done with that. Now we look at this information right here. You see here it says that extracts from the trial balance. Now in grade 10 is very simple because they tell you and they show you, we're just checking if you are able to identify where the information is by labeling the accounts. So when you look at this and you look at the statement of comprehensive income, you should understand that comprehensive income deals with the following. I'm just going to write what comprehensive income deals with. It deals with business operations. Now, how does the business operate? First of all, it's got to have its trading. It also has got to pay all its expenses. It also has got to consider all its incomes. So here, on this statement of comprehensive income, we are dealing with operations. Where do you find operations in the ledger or the trial balance? You find operations in the nominal account sections. Operations means how the business operates, how the business works. It's in the word. Operations, how you operate. How do you operate a machine? Now, how does a business work? A business works by making a profit, paying its expenses, getting a little bit of income from external duties that it does for the society or maybe for other businesses. So that's what it is. So operations is how the business works. We need water, we need electricity, we need cell phone, we need a little bit of plastic material, let's say, or consumable stores, we need packing material as well, we need tea in the business, we need pens, all those kind of things. We need those things for the business to operate. They might not necessarily mean that we're going to make a lot of money with them, but they are there for the business. It's the same as you needing different types of bacteria in your body. Some are good, some are bad, but you still need them. You understand what I mean? Doesn't mean that they're going to affect your growth, it becoming a better man or nothing of that nature. They are needed to be there in the body so that your body can grow. Same thing in the business. These things are needed for the business to operate, because if it does not have that, the business won't operate. For example, if we don't have electricity, will we be able to operate? No, we need somebody to lend us electrical power so that we can be able to function. If we don't have internet, will we be able to function as a fourth industrial revolution kind of business? No, we won't. So we do need these operations. Okay, so this is how a business works. And where do we find operational activities? In the nominal account section. Please understand that the nominal account section deals with operations. Very important. Operations, how the business operates, how the business works. Okay? How the business works. That's the nominal account section. So everything in the the statement of comprehensive income deals with what? With operations. I hope we are clear. So we are going to use this information for us to populate the spaces which are left here. Listen, I'm saying populate. I'm not saying that we are going to write the answers yet. No. The accounting has a system in which we need to use the information that we are given. So this is the system that we use. What is relevant for us in this trial balance? The nominal account section. That is what is relevant. So whenever you see this and whenever you get this information, you go like, oh, extract A. Oh, it's a trial balance. What is this for? This is comprehensive income. I'm going to look only at nominal accounts and transfer what I need to transfer. Okay. Now the transferring also needs you to move some of the amounts for the purpose of what? For the purpose of making sure that every information that is there has been accounted for. As you can see, some information has been recorded here in your statement of comprehensive income. Now, ladies and gentlemen, remembering that nominal account section, let me just erase this. Now, remembering that nominal account section deals with operations. These are incomes and expenses. Now, last time when you spoke, I said owner's equity deals with capital, drawings, incomes, and expenses. And then it increases on the credit side and decreases on the debit side. And with that, I said that on the debit side, you are going to get your not incomes but expenses. Expenses. Okay. Let me just erase that. Yeah. So here you will have all your expenses on the debit side, and on the credit side you are going to have all your incomes. Now when you look at your balance, when you look at your question paper right here, you will see that on the credit side you have got amounts here. You've got sales, you've got rent income, you've got commission income, you've got interest income. Now we are supposed to understand what's happening here. Remember that the last step for grade 10 in the accounting cycles is called financial statements. So there are 3 financial statements. We've got notes to the financial statements. Actually, there are 4. We've got notes to the financial statements. We have got your statement of comprehensive income. You have got your statement of financial position, and then you have got your analysis and interpretation of the financial statement. This is your what? Is your ratios and your financial indicators, whereby you need to determine where the business is right now, where is it going, whereby you look at the liquidity, you look at the profitability, you look at the solvency of the business, all those type of things. You look at them in the analysis and interpretation of the financial statement. So without further ado, ladies and gentlemen, let us continue. Alright, so we have all our incomes. We look at our incomes. We know that sales is an income. We know that debtors allowances is not an income. We know that rent income is a income. Commission income is a income. We see here that we have got interest on fixed deposit. It's on the debit side, on the credit side. So that means, yeah, it's an income, right? However, this is not going to be recorded here up top. Please note, in the format of your statement of comprehensive income, please note what's happening there at the bottom. Here it says profit before interest expense, right? So when it says before interest expense, automatically our brains is telling us that means after this it's interest expense. So here we've got gross profit. That means that's the whole profit for the whole year. So what should be on top here? So please remember that we've got our notes. We've got note number 1, which I'm going to write here, note number 1, and we've got note number 2. So for those of you who are listening in class, you do know that note number 1 is interest income. So interest income will always come here. So let me change my pen. Okay. Interest income will always come before interest expense, because interest income, it is note number 1. So we've got an interest income is going to come there. And then obviously here is going to be interest expense. You see, I've not even started with my adjustments or with transferring anything, but already I know what's supposed to be here. Now, a majority of you people, you tend to overlook this. So do not overlook this. You look at the bottom, then you have this, and then after that, everything else that's not any of this, that's not note number 1 and note number 2, should be accounted for in either either operating incomes or operating expenses. Okay, so we already know what is sales. Now, ladies and gentlemen, I said to you in class, and those of you who, I'm also saying to those of you now who are just listening to me, who listen to their teachers, sales. What is sales in the statement of comprehensive income? In some books and in some statements a long time ago, we used to have two words which were put here. The first one was revenue, and then the other one was turnover. Now, why did they use these words? These words, they are a change in what exactly sales is. Sales is not sales in our statement of comprehensive income, but sales, it is all the things that we sold minus all the returns that our debtors brought back. So sales is actually sales minus debtors allowances. All right, so in this case we are going to start with the sales that we have there. How much is the sales? It is 588,000. So we're going to write here 588,000. We open bracket. I told you that we account for all the amounts. So okay, just going to increase the size here. Okay, right. If it's bigger, I can write a little bit better. So okay, now ladies and gentlemen, sales is supposed to be 588,000. Now, sales, ladies and gentlemen, as I said, in the older days we used to have some terminologies for sales. The first one was revenue. Wow, what did I write? Okay, the first one was revenue, and the other one was turnover. Because sales, it's not sales. Sales now is a transformation of what sales is. This is revenue, what we are really expecting from people, or what we really expected, the true reflection of the money that we are going to get at the end of the year. This is the true reflection. So we say sales minus all the things that were brought back by the debtors, that is debtors allowances. So how much is debtors allowances there? You can see that it is on the debit side. So because it's on the debit side, the sign that it will carry is a minus. You see that? Minus. So we minus that. So how much is that, ladies and gentlemen? It is going to be 6,800. 6,800. We are done. We don't close the bracket because we're not done with additional information. Right now we are just transferring the first information. This is information A. So obviously there should be information B, maybe information C, but this is information A. We need to exhaust information A for this particular book. And this particular book is Statement of Comprehensive Income. We are going to look at the nominal account section. All right. Are ready? Now we start. We go back now. We look at the cost of sales. Open bracket. How much is the cost of sales? That's 420,000. 420,000. Now we are done with these two. We are done with sales, cost of sales, debtors allowances. Now we look at rent income. It's an income, so we have other operating incomes. So that we come here to the incomes. Do we have rent income here? No. So we're going to write it as an item. Rent income. We open the brackets here. Okay. Now, as we open the brackets there, we take the amount, we transfer it. How much is the amount there? It is 36,200. So it's going to be 36,200. All right. Now we are done with rent income. We continue. After rent income, oh, there's commission income. In our answer sheet, commission income has already been written. So we open a bracket. Simply open a bracket there, then transfer the amount. That's 10,150. So that's 10,000 150. All right, and then we go to the next one. This is a expense. You can see that everything now is expenses, so we're just gonna go down to the expenses section. Operating incomes, we're done with them. Now we transfer all the expenses. We're going to start with the first one there. It says salaries. Oh yeah, look at that, salaries was written for us. So what do? We open a bracket and transfer the amount that we see on our trial balance. How much is that amount for salaries, ladies and gentlemen? It is 43,500. 43,500. The purpose of doing this, ladies and gentlemen, it is for you to curb time. And then when you do this, you will be able to finish your accounting question paper on time every time, because you use the information as you proceed. As I said last time, in accounting, we do not finish a book, we finish transactions. So when you finish the information and the transactions, when they are all finished, then we balance the book, then we total the books. Okay, so before we do any totaling, we don't get excited. We need to finish transactions first. You don't want to be that guy when they say 5 minutes left and you realize, oh, I'm not done with income statement because I was busy trying to finish up the balance sheet. No, don't be that guy. Please don't be that guy. All right, so we look at that. We are done with salaries. Now we've got insurance. Is insurance written for us? No, so we're going to start with it here. Insurance. Then we open a bracket. How much is the amount for insurance, ladies and gentlemen? That is 12,500. We're going to start with that. That's 12,500. And then we have got the amount there for bad debts. Do we have bad debts as an amount that's written there for us? No, we're going to write it then. So we have bad debts. Now, how much is the amount for bad debts, ladies and gentlemen? That is 4,800. 4,800. After that, we'll have stationery. Oh, look at that. Stationery was written for us there. We open a bracket, we transfer stationery. That's 3,320. 3,320. And then we'll go to water and electricity. It was not written for us, so we're going to simply write it here. Water and electricity. So we open a bracket here. And how much is the amount for water and electricity? That is 19,100. 19,100. And then after water and electricity, we look at the amounts there. What follows after water and electricity? We've got bank charges. Now we're going to write bank charges here. We have got bank charges. How much is bank charges? We open a bracket. That is 4,200. 4,200. And after that, we are going to have packing material. Packing material, ladies and gentlemen, we start with it. We write it here. Packing material. We open a bracket. How much is the packing material? That is 7,100. 7,100. All right, ladies and gentlemen, we'll be continuing. As we continue, we have got our advertising. Now you'll see advertising has been written for you up there, so we are just going to transfer the amount. That is 2,300. 2,300. And then we have got advertising. Now we have it. We finished with that. Then we go to the last one, ladies and gentlemen. That is going to be your interest on fixed deposit. Now you've got interest on fixed deposit. So we go down to interest. Remember that we wrote this before everything, because we know that in our income statement we use note number 1 and note number 2. So here, if note number 2 is interest expense, and it says here profit before interest expense, so that means after profit here is going to be interest expense, then you have profit for the year. So interest expense, interest income. So please look at this. It says interest on fixed deposit. Very important to see the side, because sometimes it will be written interest. So if you can't identify if it's fixed, if it's income or expense, just look at the side. If it's on the credit side, it's an income. If it's on the debit side, it is a expense. So if it's an income, it comes to interest income. If it's an expense, it comes to interest expense. But it will be written interest on loan, interest on fixed deposit, interest on whatnot, interest. So just look at the sides. So right now we've got interest on fixed deposit, which is a income. So right now we're just going to write that, open the bracket. That is 1,620. Now, ladies and gentlemen, we have exhausted information A with regards to what? With regards to our statement of comprehensive income. Okay. So, after information A is information B. These are adjustments. We are going to need to do this one by one, step by step, and understand exactly what these transactions are for. Remember that most of the times where you see adjustments and additional information, this, ladies and gentlemen, refers to the year-end transactions that you guys must have learned about in your June curriculum. All right. So you can see after you complete all of these additional information 1 all the way to 10, we will be done. Now we'll be done and concluded. So for now, we are done with information A, and as I said, this is going to be a double segment. So this is the first segment. If you have any questions, please do contact me. So before I conclude, please remember that in information A, we transfer the amounts which are relevant only to what? To the statement of comprehensive income. Should you, by any chance, decide to put any of these things, which are your balance sheet, should you put any of this, ladies and gentlemen, just know that you are going to have foreign items included in your question paper, meaning that if you get 2 or 3, actually 3 foreign items, it will account to a -1, and then considering it goes on. But shame, if you're losing marks, nobody's gonna take marks from you. If you're gaining marks, you'll be hurting yourself. So you need to understand which information goes where, and there will be some items which are highlighted here but are going to change. For example, trading stock, something is going to affect trading stock in information B, and we might have trading stock deficit or trading stock surplus. We also are going to have provisions for bad debts. Okay, here you don't have it, but maybe it's there in your transactions. Provisions for bad debts usually will be a balance sheet account section item. However, when there is an adjustment to it, note adjustment. When there's an adjustment to it, last year it was 50,000, this year it's 49,000, so we need to adjust it down. That will be provisions for bad debt adjustment, which is going to be a nominal account, which could be considered as an income or an expense, depending on the nature of provisions of adjustments. Okay. So yeah, I think we are done for this video, and just wait for the next one. Thank you.